Everyone, in this video, I want to go over buying power, why it's so important if you have a small account. So let's say hypothetically I have a $10,000 trading account, no margin, just straight cash, and I'm only doing options. Day trading, maybe swing trading, calls and puts, no spreads, nothing fancy like that. If I go first day, $10,000 account, and I buy 10 contracts at $1 each of stock XYZ, that is going to cost me $1,000. If I hold that trade overnight, my buying power is going to go from $10,000 minus $1,000, that's the total risk I have on that trade, to $9,000 the next day. Then the next day, I'm still holding my position stock XYZ, and I see stock ACB. And these options are a little bit more expensive at $4 each. So $400 per one contract. I'm thinking I'm a big dog and I'm right. I'm going to buy 10 of them. That's $4,000. So I already spent $1,000 of my buying power yesterday, but $4,000 today. My buying power is now reduced to $5,000 left. If I don't start closing out of some of my positions 2 days into trading, and I have half the buying power that I just had when I started, $5,000. Then the next day, let's say I love another trade, market dips, I'm down on my positions, crap, I'm shit in the bed. Well, hopefully not. And I buy another lot this time at $3 a contract. That's $3,000 of buying power used. My buying power goes from $5,000, use $3,000 today to $2,000. I only have 3 positions up, and I have $2,000 left. So you can see, holding these trades overnight, not scaling out, I really start to dwindle down my buying power. Now let's say I started with $10,000. I bought 10 contracts at $1, so $1,000 of use. My buying power down $1,000, but I closed that position that day. So I day traded those options. I do it at break even at $1, I get rid of them, and buying power is gonna go right back up to where I started at 10,000. So day trading the options with a small account, your buying power will be replenished. As long as you sell them for the price you paid, or if you sell them at a profit, your buying power will go up if your account goes up. But be very, very careful not to trade too big if you have a small account. Rule of thumb, don't risk more. Well, you have a small account, it's gonna be hard, but don't risk more than 10% on any trade of your account. So if you have a $10,000 account, don't go over that $1,000 limit per trade in the options market. If your trades go against you, of course, you can always use a 50% protective stop loss as you get more advanced, depending on the option premium and depending on the expiration, you can wiggle that a little bit more there. But buying power is real, and it's so important that you understand it when you're trading, because you're just watching, let's say, the television, the people are buying stocks all day. You watch it hour-long show, they might give you 10 buy recommendations. Unless you have gazillions of dollars in non-stop buying power, it'd be really hard to do that unless you're buying literally like one share of stock or one option. That's just being real. Like, subscribe, leave a comment. If you have any questions, put it in the comments below. I'm out.